Okay, I would like to welcome everybody to the first FX Daily video. And what fxdaily.com is a community of capable traders whose primary goal and sole purpose is to cooperate and work together to build value and support each other. That is, share information and pool resources so that each individual member may achieve their goal of becoming a consistently profitable trader. Now, what I would like to do is turn everybody's attention to the chart in front of me, and that is a chart of the euro yen. And if you pay attention to the upper left hand corner here, you can see that this is a euro yen chart. It's a daily chart, which means that every one of these candles represents a one day's worth of price action. Now you can see from the bottom, this is actually over a year, almost 13 months, the past 13 months price action in the euro yen. Now to display and to describe the most recent trade that I took, we're going to have to sort of zoom into the right side of the chart, and that way we can see each candle more clearly, and we can begin to apply some of our tools. If you see now, we can only observe about 5 months of price action from last, say, August or so until just recently. Now, to begin, what I did was I applied one of my favorite tools, which is a pitchfork tool, and that helps us to get an idea of the direction that price is trading, and also various levels where there may be some opportunity for trading, whether to enter long, that is buy, or enter short, which is to sell the currency pair. What I would try to do first is apply a pitchfork to this to the price action here, and the way it's done is to select 3 points, and they are usually a high low high or a low high low, like so. So let's say, for example, I took this one to be the low, and then the next highest move to be the high, and then down here at the bottom at the lowest point of price action. Now you can see that price action sort of stalled here with what we see is clearly a sort of a doji formation. What I did was I had drawn this pitchfork well in advance, and had probably done so just after 2 or 3 days after this doji had formed, and then we saw a significant turnaround in price. I began to draw this low high low. So this pitchfork formation was here for quite a long time before the trade formed. Now, what I did next was I always place my next favorite tool, the Fibonacci, here on the lowest part of a recent move, and drag it to the highest part. Okay, so now we see what we call the retracement, and these are the 3 levels, 38, 50, and 61, and then we see the levels above, which are called the Fibonacci expansions. Okay, now what we see here is we see price out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days. We only have 3 very, very weak days of down movement. So 11 out of 14 days of straight up, which does happen, but it is fairly rare in its probability. So we could potentially look for areas where price might exhaust and might hit some resistance and reverse into the other direction. So if you notice here, from the bottom of this move to the top of the first move, the extension, we hit some resistance here at the 38, but then on the 61, we're coming to both a whole number here. Oops. We're coming to a whole number here, which to share with everyone, and I'm sure some of the more experienced traders know, a whole number, which is a round number like this, 113, 114, 115, is a place of natural resistance, natural support and resistance. So what we have here is we have price sort of running into a very significant Fibonacci level, a round number of resistance, and the top of this very, very well-defined pitchfork that we had drawn on our daily chart for 2 weeks already. 2 weeks. So this was definitely an area that we were looking to. We would look to see potential levels for resistance. Okay, now that leads us to our next sort of level, and that is here. We go ahead and add the 2-minute chart. Now this is a Euro-Yen 2-minute chart, as you can see up here in the upper left corner. So each candle is 2 minutes of price action, and what we see here is an initial spike up by the euro. The euro was bought suddenly, and the yen sold, and that was due to a downgrade by the S&P credit rating agency on the creditworthiness of Japanese debt. And so that made investors sort of run out of the yen and buy up the euro. Okay, so on this first move, what we did was we also drew a Fibonacci. As you can see, the price moved back perfectly to the 50% Fibonacci, and then obviously you could have entered here for a long or more up. But what we did here is we added a few interesting indicators here, and this one is this sort of stair-stepped line here is basically a 20-period moving average from the 60-minute chart. So basically it's the average of price over 20 hours. Now this one on the outside, the whitish one, is 4 standard deviations above this. We use this as an indicator to potentially indicate a level where that is so extreme, while it's not impossible by any stretch to reach this level, it is an area where we could potentially see exhaustion as prices extended, and areas for entry for a trade in the opposite direction. Now, as you see, we always draw Fibonacci's on every major completed move, and as price approached this 4.0 containment band, as we call it, it also reached the 38% Fibonacci expansion, not to mention the 114 whole number of natural resistance. And as we had explained before, there was the upper median line of a pitchfork was roughly in this area here. So we had a major confluence. Now, if you look at the bottom, you can see that there is some. This is a MACD, MACD. I will definitely go into the details of this indicator in the future, but and there are much in my opinion more valuable instances or versions of the MACD, and I will also share those with people in the future. But you can see that there was a major high here, and although price kept going higher, the MACD actually was lower. So even though we had a higher high in price, we had a lower high in the MACD. So and it continued as price made it a couple pips higher, or made a double top, a triple top, even 4 times here. We saw a price, the momentum, which the MACD is measuring momentum, tend to drop off, and was almost to the 0 line here on the 4th test. Okay, so what I did was essentially I entered in here at the whole number, roughly at 113.90 or so, and I was immediately treated to a quick reversal, of which I took some small profit, but that was not my goal, as the sort of major goal of my trade was to get a move back to the 113 level. And if we recall, you see here, that's exactly what happened. On Friday, we had the Dow Jones had been up 8 straight weeks, and many people were looking for some sort of profit taking in the equities. And lo and behold, on Friday, we got major sell-off with some macroeconomic turmoil in Northern Africa and Egypt and so on, and that spurred a little bit of risk-averse atmosphere, and investors sold risk assets, which in this case is the euro, and bought what they deemed to be a safe haven financial instrument, and that is the yen. And so we saw a reversal for nearly about 200 pips, and I was able to get out of this at 112, and I was able to pick up about 190 pips on this trade. So anyway, this is just a sort of a very, very simple representation of the potential to see a trade well in advance, to identify levels that are highly probable for trades, and then to sort of illustrate some of the details of the various tools and indicators that we use in making trades. Now, there will be much more detailed analysis in the near future, and we hope that we're able to contribute and add value to all of those who may share with us and view our videos. So, that being said, welcome and thank you very much, and happy trading, guys.